Good morning, good afternoon, good evening, traders from across the globe. Well, in this case, good afternoon, as this video is coming to you midday on a Friday. And welcome to the 1461st installment of Short-Term Trading Live with Oscar. And I want to show you this video because I have found things getting very interesting out there technically, and you need to see what's going on. Risk. You know what? Let's get right to the point. This game is risky, period. It is not for everybody. You need to know that if you don't have a pocket full of money to lose, don't bother playing these crazy, insane commodity markets. But if you know about putting in stops and you've got risk capital and you are someone that knows what they're doing, follow me on what's going on here. So, this video is being filmed midday on April 22nd, 2016. And what you're looking at is a very familiar chart. Does this chart look familiar to you, OMNIacs, and to new traders alike? I started using this particular chart, this exact same chart, several years ago in videos. And what I used it for was to call official top in gold around 1680. We really called official top up at 1710, but we didn't want to make it known to the world that we fully thought the rally was over in gold that started in 2006. We didn't think it was appropriate to say anything until it broke 1680, and we made an official call for top there. So I had shown you this chart, and all that was on this chart was before here, so none of this I'm going over existed. And all we had was this pattern here. We called top, and I showed you that when we break this yellow line, it's really going to fall apart. It broke the yellow line. It made another formation almost exactly like the one up here. And basically, we used this chart to trade gold all the way down. Well, this very same chart, and I've been showing it to you all along, we also used when gold broke out of this line right here. And if you look, it couldn't get out here, and it couldn't get out when it rallied here, and it couldn't get out when it rallied here, and it almost went lower instead, and it did here, and then here it got out, and this is a weekly now. It has stayed out ever since. And look, it also got above my OMNI Trading Academy's proprietary moving average. Follow that. We were above it, above it, above it. Right around the time OMNI calls top up here, it actually 10 weeks later breaks my OMNI average or OTAPMA, and the rest is history. Tries to get above it once, fails, once goes back down again. Well, look right here, and then I'm going to blow this up for you. We get above OTAPMA and build a bull flag. Now let me blow this up for you so you can see what I'm looking at. This is a bull flag on the weekly in gold, and it is well above this trend line right here. It broke out of this pattern, right? You see it. Now, this is the same chart. I just blew it up. So you have a bull flag in gold on the weekly well above that pattern that made us short for so many months on end. So, yes, gold came down today, but that doesn't mean gold's going to come down too far. We shall see. We're going to take it one day at a time. This is for slightly longer term trading. But I don't want you to go gangbusters crazy on selling gold yet. Let's see if it's going to hold this bull flag or not. Because if it just comes down to here, let's say, and holds, well, that's just a rotation inside of a bull flag, and head back up you'll go. So be careful if you're going to jump in on the short side of gold. I know it had a big down day today. Another thing I wanted to tell you was OMNI came out with a neutral in all markets last night. We started off Friday completely neutral. OMNI called a neutral in all markets. We did no trading in grains, no trading in metals, no trading in indices, neutral across the board. So let me start to show you some charts now that we've looked at gold. And I just want you to recognize, yes, it's been coming off. And if you're scalping on the short side, great. Don't fall in love with the short side yet. You are in a bull flag on the weekly. Let's now move out to a few other charts that we hope we find interesting. Looking at this, you know what? Let's go all the way back. Let me start somewhere else. I think the best spot for us to start this session will be here. Let's go to the S&P. This is the daily S&P. Now, I had shown you in a few, almost every video leading up to this one for the past few weeks, that we've got what's called resistance. You connect the all-time highs to the next all-time highs, and you project out, and this was our resistance. Now, everything above this green line didn't exist. And we would bounce off the resistance and come back down. Well, we got above the resistance. Now we call it support. Why? We got above it, came back down, tested, held, and took off. Wonderful look, if you ask me, on the S&P chart. That's a fantastic look. So that's the daily S&P, and Omni has been buying it or trying to buy it if it doesn't get filled. So Omni's been bullish. We are above the resistance. The daily E-mini looks great. Let's go look at the NASDAQ now. Looking at this NASDAQ chart, opposite almost of the S&P. One of the reasons why I'm sure Omni went neutral. You've got markets that look bullish and markets that look bearish, all part of the same sector. Doing last night's analysis for trading today, I'm glad Omni gave me a neutral because look at NASDAQ. NASDAQ is underneath its flag right now, looking completely different from what the S&P is showing us. Yes, you're above the 200-ball moving average, bravo there. But NASDAQ doesn't look nearly as pretty as S&P. These are daily charts, short term. Just thought I'd show it to you, but Omni's neutral, so it didn't matter to us anyway. And let's go with another one. So you've seen one that looked good, one that looked terrible. Let's look at the Russell. This Russell chart couldn't look better. There is no better look than what you see right there. It's been in a fantastic channel. It's now in a bullish F flag, an Oscarism known as the F flag. It bounced off the bottom of the F flag this morning and took off. The Russell looks great. So you've got ES not looking great but not looking terrible. You've got NASDAQ looking horrible. You've got Russell looking fantastic. Then we go here. Let's go to the Dow Jones Industrial Average. Dow Jones Industrial Average looks just fine. We're only going to look at this for a moment. That looks just fine if you ask me. So let's just move right out of here. Let's go to the Transportation Average. Interesting chart. This has been my chart masterpiece for several weeks now. I've been showing it to you in video after video. Bull flag, this big pink thing, forms right around the 200-ball moving average, gets out of the 200-ball moving average, gets above it, creates a bull flag, breaks out of the bull flag, and here's the look that we have now. And if you ask me, here's your pole. It's nothing more than another flag building. So on the dailies, these things are looking fantastic, right? The daily charts, except for really the NASDAQ, are starting to look fantastic. But let's jump out to the weeklies and see what we got going on. Now we go to the weekly. Dow Jones Transportation Average, deemed the leader of U.S. indices. If you ask me, that looks even better than the daily. Look, you've got this massive channel we broke out of. Look at how long it took to get out of this channel, right? From when it started, could not get out. Couldn't even get near it. Gets under it a little. Could not get out. Gets under it a little. Couldn't get out, gets back down, and then blows out through it on the daily chart. On the weekly chart. This should say weekly. So this is a weekly chart, and this looks even better than the daily, in my opinion. So now that we're looking at this, you go, Oscar, you've been talking about this head test and the head and shoulders and all of that, and that the market might not get past that. What about all of that? Well, that's where we're going next. Here is what I've been showing you for, 12 weeks now. The S&P has a head and shoulders, which is generally a bearish formation. There is something that's known as an Oscarism. It's something I believe that I've invented because I've never heard of it before I started using it for the last 20 years, I guess. But when I showed it to my crowd, they never heard of it either. But here's my head test, and this is what I always expect after a big head and shoulders gets put in. So you get the left shoulder to build, the head builds, the right shoulder builds, and you run up for what's called a head test. And now here's what I would expect. This is my brand of analysis. If, in fact, you reach the middle to the top of the head, there's the head, and you fail and the market turns around and breaks, that's telling you that the head and shoulders is real and that you can trust it's going to break hard. So we reached the head test area, and we have been here now for 1, 2, 3, 4 straight weeks, a full month in the head test area. This is a weekly, don't forget. If, in fact, we fail here, I kid you not, projections are really ugly. But we are starting to get past it, and those charts I just showed you tell us that we likely will get past it. Once again, it's also making an F flag up here, look, and starting to break out of the F flag. So you've got some great stuff happening, even though we know that there is this head and shoulders and this head and shoulders head test, and we've got to keep it in mind. But look what's happening up here at the head test. You've got an F flag building. You are at the head test without failing yet. Yet, it's not over, kids. I am not telling you that this Head and Shoulders didn't work. It may very well work. That's why it's in tonight's video. But so far, this is looking much better than I was expecting when we got up here. So let's see. Now, normally what is supposed to happen is you get a last gasp of air and you dump. And you shouldn't take out these previous highs back here. That shouldn't happen. Even the head, you shouldn't take out the high, but we're getting close. So we're neutral today, luckily, and I have to admit the NASDAQ came off pretty hard. And if this is going to be the failing head test area, it would start on a day like today where it looks bullish at first, turns around and gets bearish, and the downside starts. So this is nothing more than a nebulous formation that we've been watching for several weeks, and we don't know that it will work because you can never tell if analysis is going to work until it does. Keep this in mind. The party could be over. But looking at all the other charts that we did look at, including this on the daily, doesn't look like the party's over yet. So let's see what we're going to do Sunday night into Monday, but this is what I wanted to show you. There's one other very interesting chart when we look at the dailies. You've got this dollar index. Now the dollar index has been in bear flag, and I remember showing these to you every time they built. I showed them to whoever was paying attention. We've got these bear flags building in the US dollar index. And they worked really well, and we went down, and the next bear flag built, and that worked really well, and the dollar index went right down, and I'm just darkening these flags, you can see them. The dollar cracks, so we had another flag here, and the dollar went down. On top of that, you are inside of this massive channel. We're going to enable the extensions and make it a little deeper, darker for you. We're inside of this bear channel and all these bear flags, and we're below the 200 bar moving average, and there's this. Can't we just expand this flag right now? Isn't that what's really going on here? Look, what if we take away this little flag and call this, you know what, I'll make it red for the sake of all the bear flags. So we'll call this one another bear flag building. We'll make it red and looking just like the others. Can't we just call this another bear flag? I mean, it looks like it is one to me. The flagpole can get a little weird, but looks to me like that's another bear flag, and a big one. So where are we in the dollar? Right near the top of that flag. Very interesting areas that we're in right now. Very interesting things going on here. So we do know this. Dollar going up makes gold, and it makes most commodities want to go down. Dollar's gone up for 2 days. Now, let's just keep our wits about us for a moment. The dollar going up for 2 days doesn't always mean much, because look right here. The dollar went up 1 day, dollar went up the second day, hit the top of the flag, and what did it do next? Right back down. Here we are, dollar up 1 day, dollar up the second day. If we hit the top of the flag and head right back down, customary, usual, expected. What else happens? If the dollar hits the top of this flag and heads back down, guess where gold and the rest of the commodities, especially grain, start to go again? Back up. That's why I showed you gold in the first chart and said that's a bull flag on the weekly. Be careful. In the end, the dollar is being watched very closely by every commodity out there. When the dollar goes up, it appears everything else goes down. And when the dollar goes down, it appears everything else gets strong. Keep your eye on the dollar. It has been bearish in a bearish channel, making bear flag after bear flag after bear flag. All right, traders, that's basically what I wanted to show you. I hope that showing you these charts helps to keep you in tune and in check with these markets technically. I know this is not an easy game. You must always put your stops in and put them in first. And remember that, let me tell you something right now. This chart right here, what is this, chart number 4 I'm playing with? Gold does not rally this far for no reason. I've been saying this for quite some time now. On the weekly, that might not look like much. On a daily, you've got this. So let me just see if I can show you what this is on a daily. That's a big rally so far. A big rally into what could be a massive bull flag. So this is your gold market, don't forget, on the daily. So big rally that we've seen, and gold does not stick its head up this far for no reason at all. So let's see what it's going to do. Please be careful out there. Let's go back to the weekly, because that's a much prettier chart. And remember, traders, to try to keep your emotions out of trading, one of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Rock and roll, traders. I'll see you all at livewithoscar.com.